Jason, welcome to Real Vision.
Thanks, Ash. Good to be here.
It's great to have you. I should say right at the outset, full disclosure, you are married to one of my Real Vision colleagues whose subscribers will know because she's on air here at Real Vision, Haley Drasnin.
That's right. I'm lucky to be married to one of your talent.
Yes. It's interesting. She actually sent me over some of the things that you were working on, and I found it really interesting. You're in a really interesting place in this business. You're kind of at a kind of a key junction point between the worlds of traditional finance and digital asset investing. And we'd really like to talk to you about that and more today. But first, give us a sense of your journey into this space, how you got to do what you're doing right now.
Sure. So I graduated from university in 2008 with a degree in finance, headed for Wall Street. And obviously the '08 crisis put a wrench into those plans. I did start out as a trading assistant at a global macro hedge fund for about a year before I went to the sell side at one of the last AAA rated Canadian banks, where I was selling fixed income and US rates products, primarily to global macro and relative value hedge funds. It was in 2013 when a client of mine told me they were at a dinner the night before, and the topic of conversation was Bitcoin, and they didn't know what it was. But what they told me, which was interesting, and this is a very sharp client of mine, so I really took what he had to say meaningfully. He said, "I don't know what it is, but I think it's about to be introduced to Wall Street, and therefore it's probably going to go up in value." And so I started doing digging and research, and there wasn't a lot available. This is third quarter of 2013. But ultimately, the light bulb went off in my head, and I realized that this concept of emailing money over the internet, any time of day or night at a negligible cost, foregoing the banking system, that concept was pretty brilliant. And I realized that it's essentially become the third stage in what I call the evolution of the internet. The first being email. Think about how much emails change our lives. The second being internet, the web browser, today better known by the verb Google, but you can get an answer to any question pretty much instantaneously. Not necessarily the truth, but any query that you have. And the third stage in the internet is what I like to refer to as digital currency and blockchain technology and cryptocurrency and digital assets and that whole suite of products. And so I started to fall down the rabbit hole and ended up leaving traditional Wall Street in the spring of 2014 to found a hedge fund that actively managed a portfolio of cryptocurrencies in April of 2014. At the time, there were very little institutional vehicles for investment into the cryptocurrency space. And there was really one at the time, and it was long only, Bitcoin only. And our thesis was there's a lot of volatility in the market. There's a lot of alpha to be extracted from the cryptocurrency markets. There's more than just Bitcoin, both long and short, different strategies. So we had, four different strategies: arbitrage, market making, event-driven positioning, and a basket of long digital currencies. And we traded through some crazy times. Mt. Gox had just imploded earlier in 2014. The Silk Road website was shut down, and the Bitcoin that was taken from the Silk Road and seized was then being auctioned off by the U.S. Marshal Service. And so Bitcoin was clearly experiencing, and digital currency in general, clearly experiencing headwinds at the time. But nonetheless, we traded, me and my partners, we traded these markets and outperforming our Bitcoin benchmark every month while the fund was still intact. But ultimately, we were too early to the game.
Right.
It was a bear market. There was a lot of negative press, and every potential investor we met with, who were mainly Wall Street or ex-Wall Street, they were all pretty skeptical of this Bitcoin, Silk Road, Mt. Gox technological experiment. And so we ended up going our own different ways. And I ended up joining a Swiss bank in 2016 to lead strategy, blockchain strategy for the global Swiss bank. And I was with the bank for about 4 years as a product manager and a strategy lead, building out the team, building out different applications of blockchain technology, of the tech behind Bitcoin that makes Bitcoin work, so that we can apply it to the bank to reduce settlement times in some of the slower settled assets, to try to streamline our middle and back offices, to automate as much as possible in a tamper-proof, non-manipulated technological way using blockchain technology. Ultimately, I left the Swiss bank in January of last year, of 2020, and started my own consulting firm called LeboBTC Ledger Group, or LLG, easier to say. And what we do is primarily work with high net worth individuals, family offices, and institutions who want to invest in cryptocurrency, don't know where to begin. Where do you buy? How do you invest? How do you know you're not getting ripped off? How can you trust your counterparty? Once you buy, what do you do with these cryptocurrencies? How do you custody? How can you sleep soundly at night if you're not a developer or someone with a computer science background, knowing that this intangible asset is, only lives on the internet, and you're not sure how the internet really works. So we work with clients to help them easily invest and easily custody their assets in this space.
Jason, it's interesting because you're right at the crossover point, talking to high net worth individuals on the one hand and institutional trading desks on the other. When people are listening to this at home, they may be a bit curious about the question like, why is it hard to buy Bitcoin? But I think it's important for people to realize for high net worth individuals, there are a whole series of other issues, specifically custody, getting best execution at scale, and just the general interface issues. If you're used to buying bonds, for example, over the phone through a broker, it's a very different space to have someone tell you, and by the way, now you need to use a hardware wallet to secure your coins. Tell us a little bit about what are some of the concerns and questions that you hear from your clients.
Yeah, no, it's an interesting observation. And what's funny is you have this trustless digital currency, decentralized currency, but the investors, they need trust. They need to trust their counterparty. They need to trust their custody solution. There needs to be that element of trust. And there's generally an old school mentality about it. So they want to be able to, since they're not the most tech savvy, if you're looking at the, baby boomer generation, pick up the phone and ask for an offer on X amount of dollars worth of Bitcoin or whatever they're going to invest. How are they going to get that relationship open? Where do they go? Who do they know to open that relationship? And so I hold clients' hands and help them open up their own OTC broker-dealer relationship. Once that's KYC'd, AML'd, and the client is open with a direct bilateral relationship with an OTC broker-dealer. And I've also helped them set up their own custody account, wallet, which we can come back to in a bit. I get on the phone with them and one of the head traders at the trading desk of this broker-dealer, and introduce them. And the client says what they're looking to do. Please offer $1 million worth of Bitcoin. They get a price. If it's agreeable, done. Hang up the phone. Now comes to the settlement piece, which gets a little bit more complicated, especially from a baby boomer's perspective. But at this point in time, they've locked in their price. They realize that, the price that they got is pretty close to where they're seeing mid-market, because there's no fee built in. There's no checkout screen with a totally different price than what they thought they were getting when they clicked buy now. And so we got to settle the trade. And so it then comes down to giving the broker-dealer your wallet address correctly. Copy and paste. It sounds easy, but you got to double, triple, and quadruple check that what you're giving them as your address is the correct address, because they're going to send that crypto to whatever address you give them. And if there's a mistake, they could send it into a black hole or to someone else, and it's a bearer instrument. They're not going to get that back. It's non-recourse. So you got to be very meticulous and careful with settlement. And so, I'm going to hold their hand through that process. And then the dealer gives them wire instructions to their corporate bank account, and you wire the money. And once they see the wire coming in, their back office, so the broker-dealer sends out the crypto, and within minutes, you see your crypto balance in your wallet.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.